Mother's Day weekend, which means it must be May, which means it's also graduation season weekend. So, congratulations to all the mothers out there, plus all the graduates out there, one of whom happens to be my oldest son, who graduated from college last weekend from Auburn University. So, War Eagle, go Nelson. Hopefully, you find a job. That's the next chapter of life, finding that job. On the program, we are talking, though, about one of the most popular savings vehicles when it comes to putting money aside and utilizing it for college expenses, and that is your college savings types of plans. Certainly, that is our choice, our favorite choice. Certainly was helpful to use that during the course of Nelson's years at Auburn to help reduce down the cost of that institution. And certainly from an accessibility point of view, your college savings accounts, while they are not certainly accounts that come with tax deductions as you're funding them, they do go tax deferred and they are tax free when used for educational expenses. And certainly over the years, they have become very popular. Total net assets in 529 plans were over 388 billion at the end of last year. That level had, in fact, more than doubled over the course of the past 10 years. So obviously become very, very popular. Again, no upfront tax savings, if you will, on them, unless you're in a state where some states offer some tax credits if there's an income tax in that particular state. But the reality is that's certainly a very user-friendly type of account that allows you to use that money for a variety of college expenses. So in this segment, we're going to talk about some of those details and sort of how to use it if you have it, because obviously the fall and college graduation and those kinds of things will be here much faster than you know it. I can't believe how quickly it happened in my own personal family. So this segment of the program, we'll be talking about more about some of the details behind college savings 529 types of plans. Also, of course, this is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're one of Central Florida's longest running radio programs, coming to you on a host of radio stations throughout the Central Florida region. Also happen to be one of the top 25 financial planning podcasts on the World Wide Web. So make sure you subscribe to us on your favorite podcast channel or social media channel of choice, including the folks over at YouTube as well, where you can see a video of this program coming to you direct from the Nelson Financial Planning Radio Studios. If you haven't been to the office lately, well, then you should come and check it out, because we've got our own little radio studio now right in-house here at the office. So a neat little area that we've added here into the office. Anyway, my name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks who also happen to be certified financial fiduciaries as well, that stand ready to help you change your life with a successful and cost-effective financial plan. Speaking of fellow certified financial fiduciaries, joined on the program last week by fellow certified financial fiduciary Rob Field. Also, we're talking about that credential, certified financial fiduciary, not just perhaps the industry's most one of the industry's most esteemed credentials. Certainly it has the highest fiduciary standard, which means that you're putting your client's interests above all else out of any of the different accreditations and certifications out there. What is unique to it, it is one of only 11, speaking of accreditations, one of only 11 designations, as we were talking about last week with Rob on the program, one of only 11 designations that is recognized as a national accredited designation. So anyway, on to the conversation about 529s and where you can use them for. It certainly is all accredited U.S. colleges, universities, but it can also be used at many trade schools, at many post-secondary schools outside the U.S., even can be used for private K through 12. So the range of eligible institutions is it's not just you got to go to a four-year college or anything like that. It is a much broader ability to use those at a variety of institutions. But you do have to understand that certain expenses are qualified expenses in terms of qualified educational expenses, and certain expenses are not qualified educational expenses. So what are the types of expenses that you can use for that 529? Well, obviously tuition, fees, books, supplies, equipment, computers, software, internet access. Sorry, not software for gaming. That's not an educational expense. But those kinds of expenses are generally included in the notion of qualified educational expenses. Similarly for room and board, if the student is enrolled at least half time, even if a student is living and eating off campus, you can use 529s for things like rent and grocery bills as well, because obviously that's a cost of going to college. So pretty broad in terms of what you can use in terms of tuition, fees, books, supplies, computers, software, things like that, room, board, on campus, off campus. The only major sort of category that it can't really be used for is transportation. So if they're going to school out of state, it can't be used for the airline tickets back and forth. Those types of items are not considered qualified educational expenses. And then in today's world, you can also use up to $10,000 of 529 funds to pay student loan debt for the named beneficiary. Although that one always kind of makes me scratch my head, because if you had the 529 money, why did you bother to borrow the money? Because when you borrow money on a student loan, chances are that that interest starts accruing the second you take that loan. So I'm not sure about that one, but yeah, that's an option. Similarly, starting next year, there's an additional option that allows you, to the extent that the 529 is over 15 years of age. So it's got to be a 529 that's been around a long time. To the extent that it is older than that, and there is leftover money, or maybe they didn't go to school, or maybe they did it quicker, or maybe they went to an institution that wasn't as expensive. Anyway, you've got a 529 with a balance left over. There's an option to be able to convert that money up to $35,000 over to a Roth. So something new for next year. But using 529s is relatively tax efficient and easy to be able to do. Oftentimes you can do it as a direct payment to the institution. In my case, one of the things that I did was I just used it as a reimbursement approach, where I just went ahead and sent whatever the school needed for money, and then I sort of reimbursed myself. Ideally, you want to do that in the same calendar year, because there is a tax document that gets generated. It's called a 1099-Q, and that shows the amount of the payout. When you do a payout, it's done on a pro rata basis. So what that means is that when you get a payout from a 529, there's a portion that's earnings, and it's a portion of the original money that you contributed to that 529. So if you take 10,000 out, some of it's going to be earnings, some of it's going to be the original amount that you put in. So that's how those are reported from a tax perspective. You don't actually need to report 529 withdrawals on a tax return. So you get the 1099-Q and you're like, okay, I got this information. You don't have to put it on the return anywhere unless you didn't use it for a qualified educational expense. In that case, you have to put it on there. And in that case, then you would owe taxes plus a 10% penalty on the earnings piece, not the principal piece. So be aware that there are some tax implications and penalties if you don't use this for qualified educational expenses. Now, I want to just say a few words, because we've run into this situation before. You know, you set up the 529, you've got it there, it's earmarked for college, and then people don't necessarily wind up using it. And so we would say, use it. It's what it is there for. People sometimes forget about it, say, oh no, I'm going to use it later, going to use it later, going to use it later. the reality is that you really should just go ahead and use it. Maybe use more of it initially rather than later. Again, because student loans accrue interest right from the very beginning. But certainly it's something that you want to utilize along the way when it comes to paying for college. We're going to take a break. When we return, we're going to talk about ways to improve your credit score. Coming up next here on Dollars and Cents with Joel Garris of Nelson Financial Planning.